Novogratz Galaxy provides liquidity on Goldman Bitcoin futures. Goldman has restarted its crypto trading desk earlier this year, and Galaxy expects to add additional investment banks as customers. Bitcoin's hitting the big time as Galaxy Digital Holdings will serve as a liquidity provider on Bitcoin futures for Goldman Sachs Group as the security firm re-enters the cryptocurrency markets. Dan Eve, will Goldman Sachs be more successful this time? This time, will they stay in the cryptocurrency markets?
Well, if the prophecies are foretold are to come true, then and we are headed for like the 250k region, then this is kind of a good time to be jumping back in, right? And although we've had a pretty tremendous drop across the board, so obviously Bitcoin is down from highs of nearly 65. It's probably scared the markets quite a lot, but also tempted people back in from the perspective that it's dropped this much, it always goes back up. That's the one thing, is that it seems to always go back up. So maybe it's good timing, right, to get back in, get people invested, and to provide those services, because they're less likely to get caught with their caught out when if they're buying the top at 65 and now sat there with the customer base going, hey, what the hell happened? You let me buy Bitcoin and now it's it's 35k and going lower. So maybe this is good. At the end of the day, these are big companies, and they're lending legitimacy to it being a tradable asset. And you take that along with, El Salvador and other countries, smaller countries, or the dollar-dependent countries starting to seriously consider, or at least publicly talk about going Bitcoin, building Bitcoin infrastructure, then I think there's a lot of big moves I think coming this way.
Justin Newton, your thoughts on Goldman Sachs re-entering Bitcoin trading?
Yeah, well, look, I think it made sense when they exited the space, and I think it makes sense now that they're re-entering. And so, to talk about that a little bit, I want to talk about the things that are different now that may lead to them spending a little bit more time in the space and this actually becoming a permanent offering. So, if you looked at crypto the last time Goldman was involved, the market size was a lot smaller. And it's not just in terms of market cap, but more importantly, in terms of market participants. And the types of people that were asking about investing in crypto was frankly crypto people. It wasn't mainstream investors. But one of the things that happened in this last cycle through crypto is it did actually start to attract the interest of more institutions, more family offices that are not ones that we would have traditionally thought of as sort of crypto focused. It's sort of pushed out more into the mainstream of investment. The other thing that's different this time is that the infrastructure and the regulations are better developed. And so it's easier for them, for example, to plug into a player like Galaxy Digital that's going to be continuing to develop and evolve their tools for institutions over time, and just kind of turn those services on in a way that they will have more protection with respect to technological innovation and a partner that can help to move things forward for them. Versus early on, all of these kinds of build outs were more bespoke, where they were having to build things that were custom to themselves when the rules weren't really fully defined and the products weren't really fully defined. And so those things, frankly, often become expensive to maintain and important to throw away, frankly. If you look at what Goldman is doing in this way, you can almost look at it in the way that a traditional startup would work, where they may launch a product initially, not find product market fit with it, go back to the drawing board, and then relaunch a product that has a much higher likelihood of success because they were able to refine and tune what they were thinking on the product market fit.
Well, I'm glad they tried again, and I'm happy to welcome them back. Ben Ark, your thoughts on Goldman Sachs?
Yeah, I agree completely. It's a case of the infrastructure being built out now, and these more sophisticated market participants feeling much more at ease. You look at the price, and I think the price now is reflecting sort of a lot of unsophisticated Elon Musk tweet tracing traders. But there is this huge move for these more sophisticated players to be involved in Bitcoin and the crypto space in general, and the infrastructure is being built out for them, and it's giving them, you know, an apparatus in which they can work within. So yeah, I agree completely with what Justin said there. I really liked the concept within the article. I think it said someone called Urban said that the oil is an extremely volatile asset. People are aware and they're like, hey, you know, this is a volatile asset, and that's true with Bitcoin. It's just because it's volatile doesn't mean that you can't trade anything, and it shouldn't be part of mainstream finance and finance packages and as a trading mechanism. So yeah, it's all good news, and it's the right time for Goldman Sachs, and that they are going to feel a lot more comfortable in the environment which they're in now, and it's just going to attract a big name like Goldman Sachs getting back forward is just going to attract more and more bigger players into Bitcoin.
Goldman Sachs, that's the name that's printed on my Apple Card. Gabriel D. Vine, welcome back to the show.
Thanks, Thomas. You know, this is just inevitable. Bitcoin is the, you know, darling asset of the cognoscenti in 2021. I believe that Thomas and I spoke about this decade being the time when Bitcoin explodes into the mainstream, and we're seeing that. No surprise that Goldman Sachs is trying again to bring their clients into the ecosystem. After all, Bitcoin is the very best collateral in the world. So as a basis for Galaxy to back, you know, these future contracts and stuff, it's not just for investment in Bitcoin specifically, but also, like I said, as a collateral or as a functional part of investment strategies by large hedge funds and such. It's a natural fit and an inevitability. So yeah, no surprise in the slightest.
It is interesting to see how long it took them to provide Bitcoin for their clients. For so many shows, Gabriel, I, and Tone, and others were all here, and we were like, why won't they offer this? It's an investment. Sure, it's risky. You could go up or down, but to not offer it to so many large value clients for years and years and years never made any sense. And it's glad to see them starting to show some sense, even if it's been a long time. Joshua Shigala, your thoughts on Goldman Sachs getting back into the trading business?
You know, the thing is that for me, I'm going to take the opposite. I think this is god awful. I think that really it's inevitable for sure, but it's god awful. These guys aren't just credit line. They don't have massive credit lines. They are the credit lines. They can short this mother to the ground and then buy up the real assets. They can take free funny money that they can get tons of and basically buy up real rare numbers. And they understand that this stuff has value. I mean, saying that, Tether could do the same thing. Tether can just buy up real rare numbers and make up fake ones to sort of do it with. So, you know, it's not like it's not happening anyway. I'm not saying that Tether are doing that, just, but they could, and Goldman Sachs can as well. You know, there's been a long history of all the silver bugs talking about JP Morgan, Goldman Sachs, all the big players, naked short selling the hell out of silver, and finding ETFs where they can get access to the stock and of these ETFs and just basically naked short them to then buy up the real asset or to have massive short positions. So I've got to say that, you know, this is a pretty important asset class to be into. And if you wanted to buy up a whole bunch of it to have on the books, you want to play some of those games. Well, they are ready to play those games. So I think this is kind of bearish news for the short term. It's bullish long term because they're going to buy it up and then pump it. But I feel like they're going to want to buy that stuff up. And they've been known to dump on their own clients, by the way.
If you can't trust a bank, who can you trust?